Hi, once again I'm back, Kaushik Chatterjee. In this video, we are going to discuss another fund, a different fund. It's all about your debt fund. So after even equity fund, now we are going to discuss about your debt fund. So most of the people, even somebody is very conservative kind of investors. When I'm talking about conservative kind of investors, means people don't want to take any kind of risk. Whatever I'm investing, I need even a fixed kind of returns. Maybe lower, I don't mind, but yes, it should be a fixed kind of returns. And my returns should be definitely there. It's not I'm going to lose my money. It's not I'm expecting any huge returns. I'm just looking for a steady returns. Maybe lower, no problem, but yes, I need a fixed returns. Those kind of investors, it is always even good for this debt fund investment. So if I'm going to invest in any kind of mutual fund, and if I'm going to look out even that options, types of mutual funds options, if I look out, so for me, even it will be the debt fund options. So the name itself already you have understood. So here you are not going to take even a high risk. The most the fund is going to invest either in the government securities like kind of treasury bill, kind of bonds you can say, even in the corporate bonds also. So this kind of investment you are going to do even through this fund itself. So somebody is going to choose. So my money, even it will be not for a long term, even not for a short term, even not for a mid term. So I can choose. Even in debt fund also, you have all the options. You can go even for a longer tenure also. You can go for a shorter tenure also. You can go even for a mid tenure also. So you have all these options also. So that's not a big problem when somebody is going to invest in the same even debt fund. But here my investment is quite risk free compared to equity fund. If I talk quite risk free, because maybe I'm going to get 6%, 7%, or maybe 8%. I'm just giving us just a scenario, but this is almost a fixed over a period of 1 year, maybe 2 years, maybe 5 years, or maybe 10 years. So I know this much money I'm going to invest, this much average returns I'm going to get, and I'm not going to lose my capital also. This is also another point. Whereas in my equity market, I may lose even whatever I've invested, I may go down. But here in debt fund, I'm not going to lose. My capital will be remain same. On that, if I'm going to get even a lower return also, I don't mind, because when I'm talking about government investment, kind of securities, kind of treasury bills, kind of bonds, even corporate bonds, so you can understand the government is going to gather those monies. Government is going to make their own fund. So when I'm talking about government fund, so definitely that is not going to be on a very higher risk also, not on an aggressive wave also. And whatever even they have gathered even from that project or from that fund, so definitely that they are going to distribute even towards their investors. Again, it will not be so high, but it will be again on a moderate size, I can say, if I'm not going to take even a high risk. So this is the fund is very, very suitable for people, as I told you, those who are looking to invest their money in a very safer note, in a very secure note, and not going to take even a high risk even for a longer time. And this is the best fund. It's all about your debt fund. So any more questions, any more doubt? Yes, I'm always available on my chat box, even on my mailbox, just expecting some of your queries, where I can also even share some of the inputs if you ask some more questions. Thanks for watching.